Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview. All right, I have here with me Dr. Mohammed Musa Tumala, the Director of Monetary Policy Department at the Central Bank of Nigeria. We'll be speaking about understanding MPC's decisions. Good morning, Doctor, and welcome to the program.
Good morning, Nancy, and good morning, viewers.
No, fantastic. Doctor, let me start with the question around how well researched are the decisions of this MPC? Because I've heard a few people were texting me yesterday, when the news broke, that the MPR was hiked by 400 basis points, which is 4%. What will be the impact? How come? Was the central bank, don't they know what they're doing? So speak to us about how well researched are your findings? How deep?
Yeah, well, they are right to express such fears because they were not in the room when, when the discussions were going on. But let me just take you through, what happens in the event of the two-day meeting. Going straight to your question, is it well researched? Yes, we do extensive review of global developments, and also in selected economies that we think that can impact, Nigeria. We do domestic developments. We do forecast scenario analysis and so on. First, the MPC knows where it wants to go. The governor has expressed several times that he wants inflation, by end December to be at 21.4. So our research department is well skilled and equipped to do simulations. So I just want to assure Nigerians that extensive simulations were carried out, looking at the variables that are at the disposal of monetary policy. So how did we get to 400 basis points, for instance? Yes. Did we start with that? No. We started with do nothing. So what will be the outcome? And it didn't give us the desired outcome. We started with, we moved on to, let's say, 100 basis points, which is just 1%. We wouldn't achieve the outcome until we reached what will give us, the outcome. What decision do we take today? But of course, it's not just limited to monetary policy rate, but we are also looking at the funds that will be available to banks to lend. And that's why we moved on to CRR and also carried out the same simulation. We combined the two. So we obtained that optimal decision. There is a trade-off. And we have a very good idea of what the trade-off is on output. Okay, so we estimated that there will be a reduction of about 0.3% in the GDP.
Okay.
But we are also very much aware of the gains that is cropping up as a result of the FX liberalization. And if you look at Nigeria's GDP data, industry has been consistently in contraction. But this is out of that contraction only in the third and fourth quarter. And we can only attribute that to access, to increase access to FX.
Doctor, one interesting thing which you've just said here, and that is actually what I heard, were the scenarios that you and your team at the Central Bank and MPC have put together, that the trade-off was that because of the 4% increase for the MPR, that you have a trade-off of minus 0.3% for the GDP.
Yeah,
so there must be
that's about 1 trillion naira, a little over 1 trillion naira of reduction in our national output.
Because there must be a trade-off. It's either you go for growth or you go for taming inflation, which Mr. Cardoso has mentioned many times, that I want to tame this inflation because you need your naira to buy you more commodities
and for sustainable growth as well. Yeah.
Okay. Now, the next question is, you've just given me the scenarios that you all painted. Can you speak to me more about the trade-off? Because the trade-off is also what people are not comfortable with in the terms of CRR, for example, which you talked about. There would be the impact on the cost of loans. As you say, of course, borrowing money from the banks will be more expensive. Even from the MPR to it would also be more expensive. As to how long are we looking at this? If you're telling Nigerians now, this is why we made this decision, what should we begin to look at? Between now and when should we begin to look at, that things will get better?
Well, we hope we are working towards an inflation of at most 21.4% by the end of the year. That will, create a better planning environment for consumers and businesses as well. But we are not just looking at the domestic economy, we are also looking at foreign investment. Our rates, even though are nominally very high, but real rates are negative and as well high. So we would want to close that gap to attract the desired investment into this country. That because we have not built that in, but that can also compensate for the loss, in the GDP, because once we do have inflows into the country, that stabilizes further our FX market, and of course that will expand production and employment as well.
Let's take a look at inflation at 29.9% as of January. That's last month.
Last month, yeah.
Yes, you talked about we've had negative returns. That's if you take a look at inflation minus MPR rate. But now with the decision yesterday, it's still a bit negative, but it's now a bit narrower. Let me put it that way. Now, let's talk about inflation itself. The MPC also mentioned in its communique yesterday that there are non-monetary factors impacting headline inflation. Of course, insecurity is impacting our food. If you take a look at our food inflation, I think for last month, food inflation was around 35%.
Yeah,
35%.
35%.
How much of deliberations go on in the room for a factor that that you cannot control? I hope you understand what I'm saying. And that is why the MPC is always saying, guys, on the fiscal side, please do this for us.
Yeah, I understand that. And of course, if you look at the communique, that is clearly communicated to the fiscal authorities. And you are also aware that the PAMSEC, Ministry of Finance, also sits on the MPC. So we have a fair understanding of the distribution of the different factors to inflation in Nigeria. How much is monetary? How much is passed through from the FX? How much is is due to structural factors? So the central bank can work on the two factors, the monetary and the FX pass-through. All of them have nearly the same solution, because once you reduce money supply or you work on the monetary, it also has an impact on stabilizing the FX. So the central bank is very much aware, and the MPC is aware of its own limitations. So when it looks at the limitation, looking at the supply side of food, it often brings that up and communicates that to the fiscal authority. And these structural factors are, of course, you have mentioned security, which is concerning this, production. But there are also distribution factors. For instance, food inflation in the mid-belt of Nigeria, like Kwara and Kogi, is up to 45%. But if you look at states that have share borders with other countries far north, it's less than 30%.
It's cheaper.
It's more than 30%. I mean, it's close to 30%. So that differential, it's about distribution. It's about how fast you can get food to those locations. It's about, what distributors encounter on the highways when they transport such foods, and so on. So these are structural factors. And of course, you know that we have poor, post-harvest management in this country. So reducing post-harvest wastage is also a good step, which is not within the purview of the Central Bank of Nigeria.
Okay, now let's quickly take a look at perhaps other areas. If we take a look at Nigeria, we are talking about food. So let me just stick with that, because even part of the cost of living crisis, majority of that, Nigerians spend 3/4 of their income on food, or even more than that. Of
course, in some locations, up to 80%.
Up to 80%.
Yes,
so
yes.
I was reading a report, was it about 3 weeks ago, a month ago, the cost of a healthy diet in Nigeria. And I was asking myself, how many of us eat healthy diets anymore? There are some people are on 001, some are on 101, some are on 011, some are on 001. So if we take a look at it in terms of how there is food inflation, and how it even impacts households now. As Central Bank of Nigeria, I would like you to speak to even households, breadwinners, people that are working, that after the decision yesterday, they don't even understand what those decisions meant. But what will be the impact on their wages, for example, in the short to medium term when they go to the market, how it will impact food, on a bag of rice, or not even bag of rice. How many people buy bag of rice? Congo of rice, on a Congo of beans, on a tuber of yam. Explain to our viewers what this means and what it will be in the nearest future.
Okay. So before we come to the households, let's look at, the supply of food in Nigeria, because food security is about, supply and access, the cost. I would say that we reached the peak of supply of food in 2008. And since then, it has been declining. If you look at the supply of dietary energy, it has declined from 2008 to date by close to 11 or 12%. If you look at dietary protein from animals, it has declined by over 28%, while dietary protein from plants by about 7%. Now, the impact of the decision on households will be several months down the line. And it will bring about stability in prices and their expenditure. They will be able to plan. If their food budget is 1,000 naira today, it wouldn't be 2,000 naira 6 months after. Okay. We want it to be as close as possible to 2,000 naira. We are very much aware, and we have the data show that households have little access to credit in our banking system. So this decision will possibly just impact businesses and few individuals in Nigeria that are holding, monies. So this is to encourage them to bring back the monies into the banking system, because they will have an alternative, to go into FX or go into the food market, to uptake, food,
and hoard.
And hoard. So there will be the government instruments that will be issued as a consequence of this decision will be at much higher rate.
So it's an incentive.
So it's going to be an incentive. This is going to reduce pressure on the market, and of course, and that is the same market where household goes to. So this decision is a very positive development as far as households are concerned. And we plan to take it from there. From December 2024, we will have a new target. We want to be able to see a stable level of prices in Nigeria, and that is what we would want to happen, to household. And of course, stability in prices also, at the end of the day, will also encourage production, and that will be generating employment, and that is where the impact on household wages will come in.
So for critics or for people that have analyzed this decision yesterday and say, oh, that was too much, 400 basis points, 4%, you people want to kill businesses and all of that, what's your message to them? And even as we end, there's another MPC meeting in a month's time, as it were, in March.
Yes, so the analysts know exactly how far the central bank should go, because the analysts would want real rates to be positive. So they know how much, okay? But on our own part, we don't want to squeeze the economy to an extent of shrinking it down, okay? And that's what brings in the simulation of what is plausible, okay? What can the economy live with? What policy options do have, the optimum, impact on both households, businesses, and the entire economy. So they know how far we should go. And by the way,
the rest of Nigerians don't know.
The rest of Nigerians
or they don't even understand, let alone to know.
But by the way, I mean, the MPC also, is anchoring expectations. Okay, so it's not just so we are also looking at, the expectations from the market and the businesses out there.
Okay, sir. I think we'll leave it at that because I have a next interview. So thank you very much for making us understand how you arrived here yesterday. The two-day policy meeting, extensive deliberations according to the governor yesterday. What I can take from this interview I've done with you now is as to, what level of trade-offs, and that what you have also told me and my viewers this morning is that you measure the level of trade-offs for every decision taken.
That is that's what I said.
Yeah.
And we know the quantity exactly.
Exactly.
Yes.
You just told me one here. That was one interesting part. So thank you very much, Dr. Tumala,
you're welcome,
for coming. We'll see you again next MPC in March, which is like in a month's time.
In a month's time, yes, of
it's
course.
It's not too far.
Thank you very much for having me. Thank you very much.
Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to our YouTube channel, drop your comments as well as like, and most of all, share our content.